22 trading days ago, Micron Technology closed at an all-time high of $1,213 a share. It had gone from a boring memory chip maker to a trillion-dollar company practically overnight.
Today it's sitting around $820. That's a 34% drawdown from the peak in about a month on a stock that's still up something like 600% over the last year. So which is it? Is this the start of the next memory crash or the best buying opportunity in the AI trade all year?
Bull case, bear case, and every dated milestone that actually matters between now and Micron's next earnings call. This is Micron Technology.
Welcome back to OrderFlow, the show that breaks down the signals that actually move markets, insider buying, institutional flow, and the milestones that separate story stocks from real businesses. I'm Ryan.
And I'm Mark. Standard disclaimer: this content is for informational and entertainment purposes only, not financial advice. The hosts may hold positions in the securities discussed, now or in the future. Always do your own research and consult a licensed financial advisor before making investment decisions.
Let's set the table. Micron trades on the Nasdaq under the ticker MU based in Boise, Idaho, and it's one of only 3 companies on Earth that makes high-bandwidth memory, HBM, the specialized chip stacks that sit right next to a GPU and feed it data fast enough to actually keep it busy. The other 2 are Samsung and SK Hynix. That's it. That's the entire list.
So today's roadmap: why this stock went from a forgotten cyclical chip maker to a trillion-dollar AI name, why it just gave back a third of its value in a month, and every date on the calendar you can go check yourself. Let's start with the bull case.
Start with the basic re-rating story because it explains almost everything else. Micron used to be a classic boom-bust commodity chip maker. DRAM and NAND prices would rise, everyone would build more capacity, prices would crash, margins would evaporate, repeat. HBM changed that. Once your product is one of 3 that can physically sit next to an NVIDIA or AMD GPU and keep it fed, you're not a commodity vendor anymore, you're a pricing power member of a 3-company club.
And the numbers underneath that shift have been extraordinary.
Micron's fiscal second quarter results, reported March 18th, blew past expectations, adjusted earnings per share of $12.20 against a street estimate of $9.21, a beat of almost 33%. Revenue came in at $23.9 billion versus a $20 billion estimate. Then the fiscal third quarter, reported June 24th, was even bigger, revenue of $41.46 billion, blowing past the $35.84 billion estimate, and management guided the current quarter to roughly $50 billion in revenue. That's the kind of sequential acceleration that doesn't happen in a normal cyclical semiconductor business.
What's actually driving demand that intense?
Micron's entire 2026 HBM output is sold out under multi-year contracts. Not strong bookings, sold out. Every wafer they can produce this year already has a buyer's name on it. Micron itself projects the HBM market could reach $100 billion by 2028, growing around 40% a year. And because HBM eats up roughly 3 times the wafer capacity of standard DRAM per unit of output, all that HBM prioritization is tightening supply of ordinary memory too. Some analysts are calling it memflation.
Let's talk about the deal that actually got this stock moving most recently.
On June 22nd, Micron announced a sweeping strategic partnership with Anthropic. It's got 4 parts: a multi-year supply agreement for HBM, DRAM, and SSDs, a co-design collaboration on memory and storage architecture built specifically for AI workloads, a strategic investment by Micron into Anthropic Series H funding round alongside Samsung, SK Hynix, Altimeter, Sequoia, and Amazon. And on Anthropic's side, enterprise-wide deployment of Claude across Micron's own operations.
Why does one customer deal matter enough to move a $100 billion plus company?
Because it means all 3 of the world's HBM suppliers, Samsung, SK Hynix, and now Micron, are formally locked in as infrastructure partners to one of the largest frontier AI labs. That's about as strong a demand signal as this industry can produce. It's not a rumor or a pilot program, it's a supply agreement plus an equity investment plus a co-design partnership, all in one announcement.
And after a run like this, how does the valuation actually look?
This is the part that surprises people. Even after the stock went up roughly 700% over the past year and crossed $1 trillion in market cap, Micron was trading at somewhere around 6 to 7 times forward earnings based on the run rate implied by that fiscal third quarter guidance. Cheap compared to other A-adjacent names trading at 20 to 40 times earnings. Wall Street mostly agrees. 40 analysts rate the stock a buy, 0 rated a sell, and the average 12-month price target sits around $1,500, well above even the all-time high, and more than 80% above where the stock sits today after the pullback.
So bring it together. What's the actual bull thesis in one breath?
The bull case is that HBM permanently changed Micron's business model from a cyclical commodity chip maker into a structurally advantaged member of a three-company oligopoly with years of contracted, sold-out demand, a valuation that hasn't caught up to that shift, and a marquee customer list that now includes essentially every major AI lab building frontier models. If that's true, this isn't a stock riding a temporary AI wave. It's a company whose fundamental earnings power just reset higher permanently.
Which is exactly the argument the bears are pushing back on right now.
Let's talk about why this stock just fell 34% in about a month, because there are really two separate stories tangled together here.
Start with the one that's specific to Micron.
Changxin Memory Technologies, CXMT, China's largest and the world's fourth largest DRAM maker, completed its IPO on Shanghai Star Market on July 27th, raising at least $8.6 billion. A well-capitalized Chinese memory champion backed by the state now has a huge new pile of cash specifically to expand capacity. There have also been reports that Apple is testing CXMT memory for devices it sells in China. None of that threatens Micron's HBM business directly today. CXMT isn't close to that technology yet, but it's exactly the kind of headline that revives the market's oldest fear about this industry. A well-funded new entrant flooding the market with commodity memory and collapsing pricing across the board.
And the second story is bigger than just Micron.
Right, this hit during a broader global semiconductor sell-off. Western Digital, Applied Materials, Marvell, Micron, AMD, and NVIDIA all sold off together after cautious commentary around Samsung's preliminary results, plus renewed chatter about Chinese firms like DeepSeek building their own AI chips to reduce reliance on NVIDIA. That's not a Micron-specific problem. That's the market broadly asking whether the entire AI capex buildout is as durable as the last year of stock prices assumed. And once that question is in the air, richly valued AI-adjacent names get sold first and asked questions later.
There was also some insider selling news that got attention during the drop.
CEO Sanjay Mehrotra sold more than 40,000 shares on July 24th for about $37.3 million, part of roughly $44 million in total insider sales that month. To be fair, those were executed under a Rule 10b5-1 trading plan he adopted back on January 30th. That's months before the stock slide even started, so it's scheduled selling, not a snap decision made because he saw trouble coming. But optics matter in a moment like this, and a CEO selling tens of millions of dollars in stock during a sharp drawdown is the kind of headline that adds fuel to a sell-off, even when the mechanical explanation is fairly benign.
And then there's the argument that this is just what memory stocks always eventually do.
That's the deepest bear case, and it's grounded in Micron's own history. Gross margins collapsed from around 45% in 2022 to roughly 2.7% in 2023, before recovering to where they sit now. That's not a hypothetical risk. It happened 3 years ago in this exact business. Every memory maker in the industry is currently racing to add capacity to capture the same AI demand Micron is selling into. If supply eventually catches up to demand the way it always has in past cycles, pricing power can evaporate fast, and a stock priced for this time is structurally different story gets re-rated hard. The bull case says HBM broke that historical pattern for good. The bear case says 3 years is not enough evidence to declare a decades-long cycle dead.
Let's get concrete. What specific dated things should people actually be watching?
Start with what already happened, because it's the foundation for everything else. March 18th fiscal second quarter earnings beat. June 22nd, the Anthropic supply and investment deal. June 24th, fiscal third quarter earnings, the $41.46 billion print that pushed the stock to its all-time high the following day, June 25th. July 24th, the CEO's scheduled share sale. July 27th, the CXMT IPO in Shanghai. That's the entire run-up and pullback condensed into 5 dates.
What's the next date that actually matters going forward?
Micron's fiscal fourth quarter earnings report, expected around September 29th. That print will show whether the roughly $50 billion revenue guidance for the quarter actually lands, and whether management raises, holds, or trims forward HBM pricing and capacity commentary.
What should people specifically listen for on that call?
3 things. First, Whether HBM sold-out commentary for 2027 starts showing up, that's the number that would extend the "we're still supply-constrained" story another full year. Second, any specific reference to CXMT or Chinese competitive pressure in the prepared remarks or the Q&A, since that's the newest risk the market is pricing. And third, gross margin trajectory, because that's the number tied directly to the 2022 to 2023 collapse bears keep pointing back to. Hold or expand margins, and this cycle is structurally different, bull case gets stronger. Any softening, and the historical cycle bear case gets a lot more attention.
If you had to rank what moves this stock most between now and the next print.
The September 29th earnings report first, because it's the next hard data point. Any additional CXMT news second, a product announcement, a customer win, evidence they're actually encroaching on higher margin memory rather than just commodity DRAM, because that's the thing that would validate or diffuse the China fear directly. And third, the broader AI capex narrative across the sector. The same one that's been whipsawing NVIDIA, Marvell, and the optics and networking names. Because Micron doesn't trade in isolation from that story right now, even though its own fundamentals are specific to memory.
So how do you actually grade this one going forward?
Watch whether the next earnings report keeps showing HBM sold out and pricing holding. Watch whether CXMT stays a headline risk or actually starts taking real business. And watch whether gross margins keep expanding or start rolling over the way they did in the last cycle. 2 out of 3 intact, and the 600% run and the 34% pullback both start to look like noise around a genuinely repriced business. Miss more than one, and this starts looking a lot more like the same memory cycle it's always been.
Bull case, HBM turned Micron from a boom-bust commodity chip maker into a pricing power member of a 3-company oligopoly. Sold out through 2026. Backed by a marquee Anthropic supply deal, and still trading at a single-digit forward multiple despite a $1 trillion market cap. Bear case, a fresh, well-funded Chinese competitor just raised over $8 billion specifically to expand capacity. Insider selling and a broader AI-valuation scare knocked the stock down 34% in a month. And history says this exact industry has collapsed from euphoria to single-digit margins before, as recently as 3 years ago.
That's Mew. We'll be back to check the scorecard when that September print hits.
That's OrderFlow. Follow us wherever you're listening, and we'll see you in the next one.